Special journals are a type of accounting record used in bookkeeping to group together similar types of transactions. They are designed to streamline the recording process and make it more efficient for businesses to track and analyze their financial data. Special journals provide a detailed overview of a company's financial activities. Types of special journals. There are several types of special journals, each serving a specific purpose within the accounting system. The most common special journals include sales journals, used to record all credit sales made by a business. This journal typically includes information such as the date of the sale, the customer's name, and the amount of the sale. It also includes a column for recording the accounts receivable or customer's account. Purchases journals, used to record all credit purchases made by a business. This journal includes information such as the date of the purchase, the supplier's name, and the amount of the purchase. It also includes a column for recording the accounts payable or supplier's account. Cash receipts journals, used to record all cash received by a business. This journal includes information such as the date of the receipt, the source of the cash, e.g., customer payment, loan proceeds, and the amount received. It also includes a column for recording the accounts receivable or customer's account if applicable. Cash disbursements journals, used to record all cash payments made by a business. This journal includes information such as the date of the payment, the recipient of the payment, e.g., supplier, employee, and the amount paid. It also includes a column for recording the accounts payable or supplier's account if applicable. General journal, used mainly to record adjusting and closing entries. Benefits of using special journals. The primary advantage of using special journals lies in their ability to simplify bookkeeping processes by consolidating similar transactions into one record. Instead of entering each transaction individually into a general journal where both debits and credits must be recorded, companies can enter totals at regular intervals, usually at month end, significantly reducing workload and potential errors. By using special journals, businesses can save time and effort in recording and summarizing their financial activities. Additionally, with advancements in accounting software, many businesses now automate these processes further. When a transaction is recorded in a special journal via software, it automatically updates both subsidiary ledgers and general ledger accounts simultaneously. In summary, bookkeeping special journals serve as essential tools for managing repetitive financial transactions efficiently while maintaining accurate records within an organization's accounting system.